Thanks, Andrew. Good afternoon, everyone, and thanks to Marie Money for having me moderate this session. I'll quickly introduce my panelists. I'll then give a quick introduction to the subject that we're going to be talking about, and then we'll launch into questions. So we have Martin Brown, Senior Legal Counsel at BW Offshore. We have Desmond Leow, Director at Clifford Capital. We have Pierre Carassus, Co-Head of Maritime Industries for Asia Pacific at Societe Generale, and Christian Nolting, Head of Treasury and Banking at Purus Marine. I'm Ben Rose, a partner at Norton Rose Fulbright here in Singapore. So the topic is trends in offshore with a focus on sustainable finance. So I was just going to quickly talk about what are the trends and why are we talking about ESG and sustainability in the context of offshore oil and gas. I mean, we all know the first trend. The last 8 years have been the warmest 8 years on record. Sea levels have risen 45 mils in the last 10 years. We're seeing extreme weather events around the world, heat waves, flooding, severe droughts. As we just heard, in order to avoid catastrophic consequences, we need to limit global warming to 1.5 degrees by the end of the century and limit CO2 to net zero by 2050. Current progress means it's impossible to meet those targets. We're told that inaction will lead to drastic hunger levels, mass migration, and the collapse of financial systems. So sustainability is a business imperative and no longer just a component of corporate social responsibility. And yet the world still needs oil and gas. My figures may be slightly off now, but when I was reading about this, I think that oil and gas still provide 84% of the world's energy. 1 billion people in the world still don't have access to electricity. Our clothing's made from petrochemicals derived from oil and gas. Peak oil may only be reached in 2030, and that peak could last another 20 years. At the same time, countries are struggling with energy supply, and there's been a shift in focus from energy transition to energy security, particularly following the Russian invasion of Ukraine. So we clearly need to use our remaining high-density energy sources more wisely and efficiently, but we also need to continue investing in hydrocarbons for the transition period. And there's not just demand, there's supply too. I think there were 8 FPSO awards in 2022, 12 more expected by the end of this year, and 50 by the end of the decade. But the increased awareness of ESG and climate activism has turned investors away from fossil fuel investments and made it harder to finance energy production, which begs the question, are the banks and other financiers still willing to finance the production of oil and gas? And the last trend, of course, is that conventional financing might be down, but sustainable financing is certainly up. I think the market has grown sustainable financing from 29 billion in 2013 to 1.7 trillion in 2021. So can sustainable financing play a part in financing the offshore sector going forwards? So we know what ESG is, but what about the implications on finance? So perhaps I can direct my first question to Desmond. Green, social, and sustainable linked loans, I think, are really what we talk about in the ESG context. Can you perhaps explain to the audience, give a background, what they are?
Thanks, Ben. Right. So green loans, social loans, sustainability linked loans, principles were first introduced by LMA, I think in 2018, 2019. So, we have seen a rise in recent years because of the increasing focus on ESG and climate change. And these types of loans are becoming increasingly popular because businesses and financial institutions like us, we are seeking to align our operations against these environmental and social goals. And they provide an opportunity for businesses to access capital with sustainable projects and for lenders like us to finance the energy transition. So green loans are essentially loans which are used, where the loan proceeds are used to finance projects for example, renewables and also sustainable infrastructure. And social loans are used for projects that promote access to healthcare education. And then the last, SLL, sustainability linked loans, these type of loans, they incentivize borrowers to achieve a certain sustainable performance target. So the interest rates of these SLLs are linked to the performance of the borrower against the targets. And just most recently, LMA has revised the SLL principles. In addition to having to meet the business as usual trajectory, now under the SLL, borrowers also have to exceed regulatory requirements or targets.
Thanks. So if we start with green loans, I mean, I think that perhaps they might have limited application in the sector, but you mentioned that they apply to green projects, the financing of green projects. So perhaps I could then turn to Christian as our offshore wind representative. What do you understand by green projects, and how is that relevant to the offshore sector?
Good day to the audience. So my name is Christian. I work with Purus Marine, and we are basically looking at offshore wind. We operate CTVs and CSOVs. So from a principal point of view, this is pretty renewable, pretty green, right? Taking a step back, I come from the banking side. I think the regulations have changed significantly. And when you look at loans and ESG loans, it has become rather complex. When you look at green loans, it sometimes depends a little bit on the regulatory requirements or the framework banks are actually looking at how to implement it. And I'm actually not the expert to comment on this. What we are able to do is we believe we have a green profile, in a sense, in principle, and are happy to discuss with banks to form it as part of the green loan principles they would like to follow. We have done transactions with parties who have a mandate to basically lend to parties according to a certain investment mandate. And we try to accommodate this. We learn a lot through it ourselves. I mean, we're not perfect. And that's how it works. So, long answer short, I don't think it's very, very typical or very standardized.
No, I think that's probably right. I mean, there are certain categories as sort of green could mean, I think, clean transportation, for example, but this is not really the conference to discuss that. We're talking about offshore. So perhaps from a banker's point of view, I turn then to Pierre and ask you a difficult question. Could green loans ever apply in any circumstances to FPSOs and related offshore infrastructure?
I'm afraid not. That's the short answer. Why? Because as Christian just mentioned, the definition of a green project is kind of framed by the green loan principles. It's done by LMA, which is an association of lenders giving directions, which is good, because the problem of green is that it's always so subjective. So it's good to have guidelines that the company must comply with and the lenders must comply with if they want to call a loan green loan. So that, as mentioned by Christian, applies to wind vessels financings, really. There is already a track record. Why? Because you can objectively define a wind vessel, whether it's maintenance or installation, you can comply it with the framework. You get that verified, by the way. It's not only about the bank saying, oh, I want this to be green. You get that checked by third-party verifiers. You have already 10 names in the market whose jobs is precisely put their credibility at stake and say, okay, we actually opine positively on this or not. So that's for the green loans. Now FPSOs, because let's maybe back to basic. What we define by offshore here is FPSO, drilling, pipe layers, supply vessels. That's from the oil and gas side. Now we also include wind farms, as just mentioned. Let me just give a bit of feedback on the FPSO side, because it's quite big still in terms of volumes. The financing of the FPSO market, SocGen has been acting as financial advisors for some FPSO owners. Behaviors are changing. So traditional commercial banks active in the FPSO space are still around. However, we see somehow a reduction of appetite. Most of them are signatories of the Net Zero Banking Alliance, and they are still here to support the clients, but we see that, you know, when they used to say, oh, I can keep 100 million US dollars 1 or 2 years ago in a project, we see that number decreasing, 50 to 75 million, for example, and Martin, please complement me on that because you are obviously at the forefront of this. But there is a reduction of appetite, number one. Number two, additional scrutiny on I would say more efficient FPSO vessels. As I said, I don't think it's going to be possible to define an FPSO project as green. However, it can improve, and there are two ways that the banks are looking at it. First, at the asset level, and we're going to have an interview of Yinso, and I'm sure they're going to confirm that you want to have less carbon emitted by the operations, by the vessel. So that's number one. Number two, even more importantly, I think, is supporting the FPSO owners who are using, you know, those bread and butter projects, as I would call them, to transition into new things. So transition, again, is very subjective. A good example is BW Offshore, that I'm sure you're going to talk about your transition to offshore wind, but that's a good example. And this is the kind of players that the banks want to support even for traditional offshore financing.
Yeah, thanks. I think Martin wants to speak, so I'm going to let him speak and maybe talk at least about the kit initially, the FPSOs, what can be done to make FPSOs at least more environmentally friendly, less environmentally unfriendly.
Yeah, no, thank you, Ben. Actually, just picking up on back to the green loan point, if these are if sustainability-linked loans are linked to emissions, FPSO contractors are in the paradox where the less oil we produce, the cheaper it is for us to service our debt. So we have immediately a cash flow issue as to reducing our revenue actually means that our debt is cheaper. That just doesn't make sense. But in terms of the equipment, and Pierre touched on this, we very much look at a number of different ways of doing this, mostly to do with power generation. One of those is the installation of an offshore wind turbine or some form of technology like that. The issue, though, is location. Many of the FPSOs which are due to be awarded are not in locations which have sufficient power or consistent enough wind to produce sufficient energy to cover all of an FPSO's demands. So the other that is possible in some places. Combined cycled gas turbines are an option, and they can look at reducing emissions by around 21–22%, and that's already quite persuasive. The issue for the contractor, though, and it depends exactly on what strategy the contractor takes. And I can see a couple of other contractors in the room. Are the contractors looking at themselves as construction focused, or is it more of a leasing opportunity and a leasing product that they have? And if it's a leasing product, then the numbers simply have to make sense. Does the CapEx actually work based on the revenue? And that means that our clients need to pay for, through day rate or some other form, whatever additional products there are to reduce emissions. Obviously, we're exploring carbon capture and storage systems as well. Again, these are very, very capital intensive, both for installation on new vessels, but also bespoke vessels solely for that purpose. And there are projects that we are in discussions with on that. The question is then, is there the financial incentive for the oil company to actually pay for those? So we end up in this difficult scenario in the middle where our emissions are very much linked to what will be paid for by our clients.
Yeah, no, thanks. I mean, talking about carbon capture and re-injection and this kind of concept, I suppose, in simple terms of a reverse FPSO, instead of sucking out of the ground, it injects carbon from perhaps even onshore back into the ground. at the asset level again, maybe Desmond, I'll come back to you, and you know, is there any scope for green loans to be used in this context? Or should we just move on away from green loans?
No, I think I agree with Pierre. The short answer is no. I think there's no way under the green loan principles that we can apply green loans for our FPSO sector.
All right, well, we will move on to the next thing that you mentioned, which was the sustainability-linked loans, so loans at the borrower level rather than the asset level, with incentives designed to improve the sustainability of the borrower's business. And we come back to Christian, maybe, because I want to ask from the shipping context at least. It seems that the shipping industry moved quite quickly and adopted targets through the IMO and perhaps through regulation and of course through technological changes. It has kind of embraced this idea, and it seems to be that SLLs are now quite commonplace in the shipping sector. So is there any crossover that you see for offshore? And I'm using offshore more widely in this context.
We do. I think one step back in 2018, when the first ESG loans rather was done in the shipping industry, it I think originated more from the commodity finance, palm oil industry as well, where the first ESG loans were. So there was already a transitioning from other industries within the banking sector. And ESG loans were very much driven to get more sustainable conversation with clients, right, and to facilitate transitioning. That was not very perceived 5 years ago. I think there was a clear separation between finance and that's our business and don't talk to us. I was a banker. This has changed dramatically over the last 5 years. And one reason has been the push from banks, which are driven by own regulations and decarbonization of their portfolios, right? And I think why shipping has been so successful compared to maybe offshore, it was easier, and people can argue if it's right or wrong how it was done, right? But at least it has been able to benchmark, to provide a benchmark, which was a Poseidon principle to some extent, to show a trajectory how to decarbonize. There's been a lot of discussion about it, but you have to start somewhere. And I think what we are facing on the offshore wind side is we would like to apply certain things. I mean, I come from a company, we are generally quite forward thinking in the sense of we want to decarbonize, we want to find commercial viable solution. But still we are in a different industry now. And then the benchmarking exercise, how to actually evaluate it, because we need to be able to meet it, becomes more difficult. It's not impossible, but I think that to some extent the benchmarking and how to evaluate is more difficult in an offshore industry. It's more complex than you can do it on the industrial shipping side. And how you do it at the moment is probably, in my view, and you see more than I do, but it's on a case-by-case basis. You get experts in, you try to verify what you're agreeing on, you get your own technical commercial people in, and you understand, is it something we can actually do? And I think that's how it's currently being applied a little bit more. That's my view.
Yeah, well, maybe I come straight back to Martin again, just because I think, you know, you were talking about whether an FPSO itself could be green. I think now we know the answer to that. But in terms of can an FPSO contractor be green, and what does it need to be doing in terms of perhaps setting its KPIs, particularly in relation to the E of ESG? And you talked a little bit about moving into other sectors, but perhaps you could talk more about at the borrower level.
Well, that's. I think each of the FPSO contractors are looking at their transition story. Where do they hope to be in 10 years' time? But in the meantime, there is a funding gap. As Pierre said earlier, the current bread and butter business, the oil and gas floating production business, is the one which actually funds the research and development of wind, alternative renewable sources of energy. And it depends how you look at the company itself. Are you looking at what its future story is, or what it purely does at the moment? And there is always a story to tell. And I think that's what the industry looks at, and what our financiers tend to look at is what are our plans, what's our future, where do we want to go, and more importantly, how are we going to get there in a financially stable manner? So to say that any of the FPSO contractors is a green company is probably a stretch. However, what part do they play in the longer term value chain when it comes to the provision of energy offshore?
you say that. Actually, I was reading just this morning that I think Tesla got a worse rating from Sustainalytics than Repsol in terms of its ESG rating. So I think the companies themselves can can play a part. But I mean, going back then maybe to Pierre on that topic. I mean, certain industries are hard to abate by definition. I think there are 7, including shipping and aviation. They don't include, as far as I'm aware, oil and gas. But you know, oil and gas, and you know, it's about the production perhaps of oil rather than the use of carbon. So is the industry fundamentally one that you consider hard to abate and therefore not capable of attracting sustainable financing through SLLs, or you think there is still a possibility?
Yeah, that's a tough question, Ben. SLL are now a proven product for shipping loans. Why? Because basically, on the basis of the Poseidon principles, it was kind of easy to use the KPIs used by the IMO, so International Maritime Organization, and the Poseidon principles signatories for the sustainability-linked loans. So the AER, for example, for you, some of you who are familiar, the average efficiency ratio, which is the carbon emitted more or less by the distance traveled and the tonnage, is now a very demonstrated KPI in the shipping world. Why? Because it's used by the regulator and by the banks. So it was kind of easy to put this as a KPI also for sustainability-linked loan. Now, offshore, coming back to your question, offshore does not have this kind of standardized KPI. So it's all gonna about finding a credible, defendable KPI applicable for each subsegment of offshore. So I don't know about supply vessels or FPSOs. That would be the way to apply sustainability loans to offshore. But is it going to be that much of a great tool? I'm not so sure. What I can tell you is that now lenders are, again, coming back to FPSOs, looking at precise indication, and they can vary from one project to another. Again, it's not very standardized. But for example, the number of kilograms of CO2 equivalent produced by 1 barrel, that's something which, based on what I've seen recently, is asked by FPSO lenders to their clients, at least what is in their control. Because there is always a question as, hey, is it about the charterers also trying to reduce the footprint? Always, right? We're never going to say that it's FPSO contractors are in full control. However, they are in control of some data. So that very indicator, kilograms of CO2 per barrel produced, is something that maybe could be used as a KPI. Maybe, but I'm not saying it should be the case. Yeah.
Yeah, we were actually at the conference yesterday at the sorry to talk about the competition, but the Capital Link conference yesterday. I loved a comment from someone who said carbon is not a swear word, and that, you know, decarbonization actually should really be about, should be talking about emissions and not, you know, stopping production of oil. But in terms of the KPIs, I think there's this whole other area of loosely termed transition finance. This is not green loans or SLLs, but transition generally in terms of helping to transition companies towards a carbon neutral future. I'm slightly conscious of the time, so one thing I think perhaps we should talk about is, to the extent that bank financing may not be, or at least will be less available to the industry going forwards, what about alternative sources of financing? Funds, Chinese leasing, capital markets. So why don't I come back to Martin first of all?
Unfortunately, I don't think we look at them as alternative anymore. As Pierre said earlier, the appetite from the conventional banks has reduced to such an extent year by year, and at the same time, the cost of building an FPSO has gone up so significantly that there is a huge issue that we face in trying to fund that. So, where we can, we need to look more at our clients to fund that gap, at the oil companies themselves. There are going to be issues in certain jurisdictions like Brazil, tax issues where that's just not going to be possible. And Brazil itself is going to be one of the bigger challenges. I think one of the Rystad indicators is that there are, I think, 27 awards expected by 2030. Now, even if Petrobras were to take 12 of those FPSOs and own them themselves, that's still 15 left to finance. With an average cost of currently, say, $2.5 billion to $3 billion, which will probably increase to 4 by 2030 at a guess, there's going to be a serious shortage of bank capacity to fund those for the contractors. So looking at support from the, and Petrobras are particularly limited by the Repetro scheme as to what they can fund. So we are looking at other equity partners, but then the returns required by those equity partners are very different to those required by the banks. And we're going to see a bigger differentiation between construction and operating finance, but there are different sources for those. And unfortunately, we are still beholden to the bank market for the construction period. Pierre, would you agree with that?
Yes, it's it's the case. I mean, historically, the commercial banks have been the best at assessing this risk, which is not small, of cost overrun, of delays, and yes, replacing them as source of liquidity, especially for the construction period, is not straightforward at all. So there is no magic solutions for now, Ben, really. It's a bit of a headache, yeah.
I guess if we're running out of time, one last question I'll just quickly ask to Christian, I guess, is the other kind of thing is government support. What level of government support do you see as being necessary going forward, whether that's through ECAs or even through guidance as to, you know, your way through the green loan maze?
No, I think, but the question you ask is a wider topic. In 15 years, financial industry has changed a lot. It's not alternative anymore, it's a diversification of funding. So it's essential for every company to try to diversify the source of funding, because there might be other reasons. And from a company itself, it's not like when you have to diversify, try to do it from day one. When you look at it, I think for different kind of financings requirements, there are different kinds of capital pools, I would call. I mean, it can be banks, leasing solution. It can be impact lenders. It can be government support. So you have to look at all angles. And I think in particular for the offshore industries, and I talk about offshore wind industries, government support is important. And you will see that it has been always provided. It's not government support like subsidies. It's export credit agencies. Often we talk about new vessels. The banks would like to come in. It's a new asset class. It's a new industry. It's often a new client or transitioning client. And risk sharing becomes important. So I think to some extent it is not essential, but it's an important part, in particular also for the offshore wind industries. And most people know that there are projects out there where people source and seek government support to some extent. But I wouldn't call it government support in a sense because it's OECD guidelines. It has to be equal playing field. But ECAs are important, yeah.
I think we have run out of time, or we're over time. So just then for me to thank my panel, thank Marine Money, and yeah, thanks, Andrew.